Welcome, ladies and gentlemen, to Commodity TV and the new edition of our online interview series. Hey, today we want to go to Australia, and good morning to Australia. And Barton Gold is here with us, Alexander Scanlon, the CEO of the company. Hi, how are you doing, Alexander?
Doing very well, thank you.
Yeah, thanks for taking the time. And it's the first time for me that we are talking. And honestly, I must say, I was not aware of your company, but very interesting what I saw and what I read about. But maybe you give us a short overview. Where are you based? What are you doing before we go into dive deeper into your company?
Very happy to. Yeah. So Barton Gold is a South Australian focused gold developer. There is a very large gold district there called the Central Gawler Gold Province, and it's actually in the center of South Australia, right next to the IOCG province, where BHP has consolidated Carrapateena, Olympic Dam, and Prominent Hill. On the other side of the highway is this Central Gawler Gold Province. We have consolidated significantly every significant historical producing and exploration asset in that region. And we now have about 5,100 square kilometers of tenements, or about 1.25 million acres, depending upon how your viewers think about that. And on that, we have built up a 1.3 million ounce resource base. We have existing brownfield mines and large scale greenfield exploration ground. And we also own the only gold mill in the region. So we are looking at a staged redevelopment of this proven gold district. We have fully permitted mining leases. We have a high grade open pit that we can utilize with our mill to start stage one. And we're now building up our resources for a large, the large scale long-term expansion. And that's where we've actually just announced a major resources update at our Tunkillia project.
Exactly. Can you give us a bit more light into that resource update? I think it was like 189,000 ounces plus. So what category is it? What grades we are talking about, and what would be next step for you?
Correct. Yeah. So we are modeling that project again as a stage 2 expansion project. So what we're looking at is a sort of a stage 1 operation where we might be targeting around 50,000 ounces per annum using a smaller high grade supply of material that we have at our Tarcoola project. Then we would be using this larger project, the Tunkillia project, where we've had that resource update for that large scale expansion to our targeted production level of 150,000 ounces per annum. And so what we're targeting there is big, broad, open pitable mineralization, the sort of thing that can be run on a very efficient basis in terms of the digging and lifting and moving and processing of material. So we acquired that asset in 2019, actually in December of 2019. It was a 558,000 ounce asset. In October of 2020, we grew it to 965,000 ounces. And we've now grown it to 1.15 million ounces. So we've added another 189,000 ounces. We have been able to do that at an extremely low cost. So we identified 3 significant extensions to depth in the mineralization. We also found repeat or sort of parallel repeat structures that were previously not tested or not recognized. So it's been very exciting, and we've done that essentially very cheaply. So it's only cost us $12 Australian per ounce to add that resource, or about $8 US per new ounce. So that's really quite exciting for us. And as we think about that, we're sort of essentially crystallizing that long-term platform that will give us that ability to underwrite a 150,000 ounce per annum operation. We expect that to continue growing. We're going to keep doing further extensional drilling on that during the balance of the year, as well as testing a number of other high priority exploration targets, because we think there's potential to actually repeat that style of deposit in the region.
Okay, wow, super. That's a lot of information. Great. So what I understand is that, as you said, you are owning a mill already. So what capacity has the mill? Meaning what, let's say, starting production for the first phase you are thinking of? And do you think that would be then enough if you look at maybe possible costs, that with that amount of gold you can finance then the next stage that you are coming finally to 150,000 ounces per year?
Correct. That's exactly how we're looking at it. We tend to think about project development from a risk mitigation standpoint. So we want to identify a strong strategy, an achievable objective, and then we want to think about how we mitigate the cost and risk of getting from stage A to B and then B to C in a very orderly, pragmatic fashion. So the existing mill is a 650,000 ton per annum plant, so about 1,800 tons per day. That mill has previously processed ore from our Tarcoola project. So we have a high-grade open pit there. It's called the Perseverance Mine. We've been mapping extensions of that gold on that mine. We found an entirely new high-grade gold zone just behind the southern pit wall. So the idea with the existing mill is, the benefit of the mill is we don't need to spend $150 million to build a new mill. We can spend $5 or $10 million doing a little bit of optimization and recommissioning that plant. As a working example, with a 650,000 ton per annum capacity and the type of metallurgy that we have already processed in that mill, we know that the material from Tarcoola, our stage 1 source of feed, will process with about a 94% recovery. So if you fill the mill, if you put 650,000 tons per annum in the mill, if you put 2 grams per ton in the mill, it will produce about 40,000 ounces. If you put 3 grams per ton in the mill, it will produce around 60,000 ounces. Now, the pit was supplying on average 3.8 gram per ton mineralization during 2018. But if we stay with that range of 2 to 3 gram per ton, producing 40 to 60,000 ounces per annum, if we conservatively assume that that costs us 1,500 Australian dollars per ounce to produce, at current prices, of course, the Australian dollar gold price is over $3,000 per ounce. So we could be generating north of $60 million Australian in gross free cash flow, which is about $40 million US in terms of that exchange rate today. And then when we think about that stage 2 expansion, we would be looking at being able to self-fund a very significant proportion of the equity required to build that second mill. And then, of course, from the credit standpoint, when we're speaking to financial institutions, because we would like to use debt, obviously, to build that mill, we will be talking to them not as an explorer who has a dream and an idea, and a promise of giving them senior security. We will have an existing mill with existing cash flow and gold production. So we have a very different financing profile, and that's how we basically leverage from stage 1 into stage 2. And as you say, cover those costs without having to have significant capital raises either for stage 1 or stage 2.
Yeah, which is loved by the shareholders also, but I could imagine somebody who finances you would love the whole setup, because the risk is so low. Finally, because when you make already money, where should it go, right? And yeah, and you have a full understanding of your ore bodies and your 2 projects, which are then fully in production, which is great. I like the game plan, honestly. I gotta consider to buy some shares here. That's really fantastic. You said $5 to $10 million. Would that be enough to really start phase 1? Because that amount looks like nothing to me. Or what do you think? How much do you need to really bring it up to, let's say, 40, 50,000 ounces annual production?
Yeah, look, from our standpoint, it's actually a very cheap step when we think about things. And again, everything is relative, right? So the cost of building a new mill and the time required to do permitting and all of these things are very cumbersome. We have fully permitted mining leases. We have our environmental permits. We have our operating licenses for our mill. We even carry our EPA license for the mill. So there's sort of a 2 to 3 year work program that we don't need to do. We sort of are, standing in front of that. And when we think about the stage 1 supply of mineralization, that high grade Perseverance mine that we have, that's an existing open pit mine, very simple. So for us to go into that and start mining again, it's essentially 0 capex, 0 pre-strip. So our focus then is the mill. And in terms of the mill, what we really want to do is just to make sure that we are optimizing essentially the gravity circuit, because there's a significant free milling gold component in this high grade gold. So you want to make sure you're getting as much of that as possible out of that feed before you go into the standard leaching circuit. And we actually started looking at this in December of last year. So we actually started disassembling the gravity circuit on the mill because we think we can optimize that. Coincidentally, when we did that, we actually took about 10 tons of gold bearing concentrate out of the gravity circuit. So we're going to process and sell that as well in the coming months. So we'll have a bit more income there. But really looking at the plan itself, It's a simple plant. It was last operating in September of 2018. We've had it on care and maintenance ever since. The really critical components, the really cost critical components that are also long lead time are ball mills. Our ball mills are in excellent condition. So we actually had a specialist come do an evaluation of them, take out the linings, rotate them, check them, and they said they're in excellent condition. So really for us, it's a bit of a simpler matter. Is restarting the crushing circuit, replacing some of the hard consumables on the mill itself, so the pumps and the motors and some of the piping. But generally speaking, it's a pretty simple restart of that mill with a little bit of optimization and dressing up.
So what would be the time frame then for you? Would it be possible next year already to be, let's say, in production? And do you require a feasibility or something? Or you just do it by yourself and say, hey, because we know what we do?
Yeah, so this is obviously I'm not forecasting in a matter of speaking, but when we tend to think in terms of the timelines according with our main strategy. So our stage 2 expansion, we want our big picture plan is to be producing 150,000 ounces per annum in 5 years' time. Now the distance between today and 5 years' time, somewhere in there we start stage 1, and the faster that we can add confident resource ounces onto this pit and then find repeats of that mineralization. We think we've identified multiple targets for repeats of this high-grade open pit mineralization, both on our mining lease and next to it. The faster we can do that, the faster we can start those operations. Restarting the mill itself would not be a very long process. It'd be sort of a 3 or 4 month recommissioning process. What we are focused on during the balance of 2023 is indeed firming up some of that stage 1 feed on our existing pit, and then identifying where year 2, 3, 4, and 5 of that feed may come. And what I will say is, once we identify 2 or 3 years of mill feed, which is broadly speaking 600,000 tons per annum for that mill, we will be very comfortable saying, okay, now we can accelerate, we can bring forward that stage 1 operation, put a team in place, start running that. So we hope by the end of 2023, we're going to have a very good idea of where the first feed is for that and the pathway towards restart, and then start to work out from the beginning of 2024 when we actually push go. It's very possible that we could be operating, in 12 to 18 months. We could accelerate it if there were other opportunities to do that. So we're a little bit cautious about forecasting in that regard, but it is it's probably best to say that it's a very quick restart from fully permitted assets when we decide to push go.
Yeah, super. No, also, we don't want to have any detailed forecast because this is impossible these days. And I think it's always impossible. No, but the point is, for me, it's important for our viewers to give us an idea. Do we have to wait 12 months, 24, 36 months until something is really, let's say, going forward with the production, with that process? Because I like the setup. That looks really great. Let's talk about money, because I found that you got already $975,000 in grants from the Southern Australian government, which is great. Could you get, let's say, some more money maybe for the restart? Because I could imagine you will start to create jobs and taxes for them, right?
Yeah. Well, look, one thing I can say on that front, as you've noted, the South Australian government, since we IPO'd 21 months ago, they've given us almost $1 million in grants. The South Australian government has been a very, very strong supporter of Barton Gold. We came into this region with an idea to essentially reconsolidate and reinvigorate a proven gold district that had sort of been left in the past because of this very strong historical focus on copper production, again, on the other side of the highway. So we've been working together with them very closely. They have given us a lot of support to date. And the South Australian government has been very aggressively investing in supporting industry and industrial development elsewhere in the state, for mining generally, for green technologies, for R&D, sort of general technologies, things that might lead towards the EV revolution. So what I can say is, if there is an opportunity for them to support us, we are confident that we have a very strong friend there. Now, we don't have too large a drawbridge to cross, but I think where the real opportunity for them to come in and lend their support would be as we're going in particular towards the second stage expansion, where we might be spending, you know, a $250 million investment. You know, we are funding the equity side from our cash flows, but, you know, the state has the ability, for example, to provide credit support or, you know, sort of guarantees of credit to banking institutions for the credit finance. And something like that would be something where they could really extend support, and we would be able to then speak with a financial institution on even stronger bases. So again, that's not something that's, you know, that's not a certainty, but it is a potential. And we have seen a lot of interest from them, and even supporting the optimization of infrastructure in the region to think about how they can support this development. So we are very confident that as we move forward at the appropriate times and where possible, the South Australian government will continue to be a very strong partner to Barton Gold.
Okay, super. Then I saw you generated $5.2 million additional cash through non-dilutive measures. That's interesting. What have you done?
Correct. So we raised 15 million Australian dollars in an IPO in June of 2021. And at the end of March of this year, March 31st, 2023, we still had $8.3 million. Now, during that time, we've done over 30,000 meters of drilling. We've done 5 or 6 major geophysical programs. Obviously, we've had our corporate costs. We are very unique in the sort of, you know, the explorer or developer spectrum of companies, because we're not just explorers. We are actually an advanced asset manager, and we manage our portfolio of assets like asset managers. So when we have our mill, we also, next to that mill, have a major mining village. We also, at different project areas, we have real estate and camps. And so we have everything ranging from surplus equipment, so equipment that was utilized for something else in the past that we know we don't need for our long-term plans. We can dispose of that equipment. We actually rent our mill, we rent the village facilities around the mill and around the region to other explorers and government agencies working in the region. So whether it's Geosciences Australia, or a drilling contractor who's working for a third party, or even a third party explorer, we rent our camp facilities. So during 2002, we actually earned over $500,000 just in rentals. So sort of the hotel that we're operating is paying us $500,000 during 2022. And then some of the fun elements as well are, last year we did a clean out of the gold room in the mill, and that produced $1.5 million of gold. So we did that clean out. That was just the gold room. That was $1.5 million. And then, as I mentioned earlier, we've taken another 10 tons of gold bearing concentrate out of the gravity circuit. So from the gold room itself up the gravity circuit, about 10 tons of material out of there. And we're currently cleaning that and processing that. So we don't know exactly what that will produce, but you know, there's a reasonable guess that it might produce, you know, another $1 to $2 million in cash flow. And so all of this, at the end of the day, we sort of have these projects which we operate like a special projects team next to the exploration team, and it covers our corporate costs. It reduces our overall cash consumption, and of course, it increases the amount of capital that we can invest aggressively in resources growth, which is where the real big picture long-term value comes. Absolutely. So we still have a few tricks up our sleeve in our special projects team, and we have a policy of working very hard to surprise the market with good news, and we will continue to do that.
Okay, super. So that means with the cash on hand plus maybe what is coming in, you are financed for this year. So you are happy.
Correct. Okay, yeah, we're very well capitalized. Yeah.
Yeah. Let's talk, because we should come to an end shortly here, to your capital structure. So who is shareholders? What has board and management? Maybe you can give some examples of institutions.
Yep. So we have a very tight share capital structure. We, you know, I know a lot of companies have, you know, 2 or 3 billion shares when they're in the junior end of the market. We built Barton Gold as a completely clean company around its current assets with a completely clean register, and we did a clean IPO, so to speak. So We have only 176 million shares on issue, specifically 175.9 million shares, but 176 million. Our options outstanding are options which are for board and management that are linked to very significant positive outcomes. So these are performance options. If half of those are become exercised or valid, it would be everybody would be very happy in the results that have been generated. So there's a very strong alignment there in terms of the incentives and motivation of the management team with the shareholders. And then the board and management actually are already very, very strongly aligned with all shareholders. So board and management represent about 1/3 ownership of the business. About 32.9% of the shares are held by board and management, or represented by board and management. So there's a very strong principal agent alignment if we think about that typical problem in an economic setting. You can be sure as a shareholder that if you are worried about something as a shareholder, we are worried about that as the board. And if we are thinking about ways that we can constantly optimize what we're doing and how we're doing it, we're doing that with the same exact set of incentives as all of the shareholders. And that's why we're probably particularly why we are so careful and efficient with our capital and so focused on generating additional capital from our assets. So that's a very important focus for us. And in terms of our sort of corporate and institutional alignment, we have some really great supporters in there. Merck Investments, they manage the ASA Gold Fund. It's a specialist gold investment vehicle out of the United States. They hold about 4.99% of our company, so just under 5%. Ixios Asset Management are a significant holder. We have some very large, I won't name them, courtesy, some very significant private investors who've been building positions in the company. And then also importantly, we have a very strong strategic alignment inside of our share register where Primero Group, this is a company that is part of a major, they're now owned by a much larger civil infrastructure and contracting group. But Primero Group used to be a public listed company. They specialize in building and optimizing mineral processing plants. So they actually own 4.2% of Barton Gold. And their former general manager of operations and maintenance, Graham Arvidsson, is on our board of directors. So we have this real specialty and alignment with a mill developer and optimization group, and their former general manager of operations literally built into the company. And that gives us a lot of real strength that might not be so obvious when you're just looking at the register.
Okay, super. Wow, sounds like a super game plan. I really like it. Alexander, thank you very much for your time. Already 23 minutes. That speaks for itself. And yeah, I must say good luck with everything, and would be happy to talk soon. And definitely I will consider to buy some shares here because that looks like a really fantastic game plan. Thank you very much. All the best.
Well, thank you very much.
Thank you. Yeah, ladies and gentlemen, that was Alexander Scanlon, the CEO of Barton Gold. Yeah, you heard it. That's a great Australian gold, hopefully soon, gold production story. But I think already as a development story, that looks fantastic. Over 1.3 million ounces resources already altogether. And I like, in fact, the game plan that they can establish very fast within, let's say, the next 18 months. Hopefully, they can establish like around 50,000 ounce per year gold production with probably 1,500 Australian dollars AISC. Gold price today is easily at 3,000 Australian dollars. So that would mean they make significant cash flows here, which would lead them then within the next 4 to 5 years, probably to a 150,000 ounce per annum production here. But don't forget, it is Australia. It's safe, one of the best mine jurisdictions in the world. They are in elephant territory. Big mines are surrounding them. And also BHP is, let's call it the next neighbor and consolidator. And I must say, really like what I see. I think the market cap is way too low. You really should check out this fantastic company. Thanks for watching us, and bye-bye from Switzerland.